If you find it hard to find your bias in the market, then this video is for you. What we're going to do, we're going to use levels on the chart. We're going to understand the trading range, and we're also going to look at imbalances in the market to do this. So we're going to go back. Let's just find the area of price. Let's just start anywhere here. So we'll start replay mode here, and we'll work our way through looking at how we can read this. So the first thing we have to understand is, where do we sit? Well, we sit right here in the market. The only way we can find where price is going to go from this point is looking down to the left and up to the left. All this price action now coming to the right has not happened, but we will react to that price action as it unfolds. So if we look from current price where we are now, and we look up to the left, what do we have here? Well, we have price coming down, and what we're going to mark off is, let me just get rid of this. We can mark off a level. Let me just zoom in, double check. Okay, so where you can see my red candle marks, if you want to learn more on these candles, how you can color code those as well, I'm going to let you have that as well later. And so we're marking off that as an area of imbalance. So I'm going to mark this off actually as a zone where I'll be looking for, see if price can push up into that zone. So that is a bearish area we're looking for price to come to. Now we can also identify this by trading range from this swing high, okay, to this swing low. That is my current trading range. Now this is a bearish move. Now there's another aspect we can apply here, just to look at where we sit in a premium to a discount pricing area. So the 50% level of this swing move, okay, to the downside, anything below the 50% is going to be your discount, and anything above is your premium area. So you can see we sit inside premium pricing. Now that is the current trading range on this move we can see on the pullback. We're going closer into price at the moment, but now we look back on price and we look at this move here. Well, we can already identify we ran through this low. Okay, so then we have these levels I can start marking out. Now we already wicked into that level where we've seen a bounce away. We then have another level here, and I can also mark another level down here. And if we just go into this area, okay, so I'm marking this out as a level. Then we have a swing low in the market, and then again another swing low, another swing low. But these are the areas I'm more concerned about. This will come very clear later on as we go through this video. So if you are struggling at the moment for bias, drop me a comment and let me know this is something you are struggling with, and hopefully by the end of this video you are going to have a much better idea how you can use this in your trading to find a bias in the market. So now we have this, okay, let me just show you, we have this move to downside as a current, okay, range we're looking for price to move against. We're seeing this swing pull back, and then internally we have a current trading range, a swing high, okay, and a swing low. Now if we push above this level, which I want to see really into this area of imbalance, or just at least a sweep of this high, that's going to give me a new trading range. So let's go forward with the candles and see if we can do this. Okay, so we do push above. So now we have, okay, this as my current range high, and this becomes my range low. Why? Because we have now pushed above this high, wicked through. That's my current move in the market. So based on that information, my tool, my drawing tool, if we now see a push down, closing through this low, we've got nothing in the way to stop price running to the downside here. So I have to see price. If we do go higher into this area of imbalance, great. If we don't know after a sweep, what I mean by sweep is that we've just made this sweep here. So mark it out. There's a nice looking sweep in the market. Now they aren't valid until we see the market running down, but from here, a lower time frame, we're likely to see a shift in structure. And now we expect this low to be run because we don't have any liquidity except for below this low. So on a market bias right now, I'm looking for sales to run to this low and then to this level here, which is going to go to this low. Now on the way up, we're going to have new areas we can mark out as our lows, but let's go forward from this area. Let's see. Okay, so we have another push up, and then we've got a nice drop. So price never went higher. We did leave this very small imbalance level, this area, this zone of liquidity. We've now run through. So right now that's going to leave a new zone of liquidity as an imbalance zone within this area here somewhere. Now we have to wait for the next candle to close to know where that zone sits. Okay, so that now becomes that area. So if we fail to run this low and now we close back up through this zone, we're likely to go higher into this area here. So let me just back that off and do that again, drag that across. So let's just see what happens next. Now I'd like to see this area of imbalance, this liquidity area, hold now to run this low. That's going to give me a nice bearish bias. So we've just wicked through the low, closed through, and that's validated. So now we have basically taken this out. We have a new current low here we could run to. And then as the market moves down, this will become our new trading range. Okay, so as the market moves down. So our bias is still to look to run to this level I've got marked and this low, but we have to now wait for a break of structure, which we've now got here. So if I move this back, it's now got a break of structure. So this area of imbalance is a great area to look for pullback to. Let's just see if we get a pullback. No, we continue to run this low here. So our move continues to be bearish. We can now mark out this as a new low where we're likely to run to. Okay, so let's continue to go forward. So again, we've now just run through that low, just wick through. Okay, so we wick through that low, see if we continue lower, and we do strong push down. So we then run to the next low. So you can see how we continue to run down through these previous areas of lows. And why? Because those lows are going to attract price, just like these areas of imbalances, because they have liquidity areas. We have liquidity in those areas of imbalances and those swing lows. So now we have a large bearish swing to downside. Let's continue till we get a pullback. So we start to see a pullback. So I can mark this out as my current trading range. Okay, so we have the range that way and we have the range to downside, but we are looking to sell. Okay, all the time we're looking to sell to this level. Let's just continue till we get a pullback. So okay, so we're holding, we're pulling back. So now we have a new trading range low. Looking to pull back, ideally to this area of imbalance. That would be a great area to pull back to, but we may not do that. We may pull back to an imbalance here if it sits inside our premium. So that's below. So it's not a level I would look to trade from. So I want to see a pullback to this area here. To show you how you apply this to any time frame. Now, if this is helping you, then please do let me know, leaving that comment below. Right, okay, so now we've pulled back, we've left this area of bullish imbalance. We may not get to this imbalance yet. We could still get there. Okay, you can see how we just failed to run into this imbalance. Well, we touched it to the pip and then we reversed. So if we see instead price dropping through this bearish imbalance, then we could look to run this low. So we're either going to push up to this one or we're going to push back through this bullish one. Now, as we close this bullish level, we're going to run for this low. That's the only place price can go. Okay, so this is looking good because potentially now we have that sweep. We have a nice sweep in the market. Now let's see if we can run lower. Okay, we went higher again, dropping now. Now we just dropped into the area of bullish imbalance. This could send price higher to this area above for a sell, but let's just wait and see. Okay, so we have now closed through. That invalidates that zone, and it now tells me that we're ready to drop, okay, to this area. Now, I'm not saying it's a trade I'm going to take there because I've been looking at this area from above. Let's just say we've taken entry there. This is where we're looking to target to run to this level below. Okay, that's what we're looking to do. Not saying this where I'm going to put a stop or anything, just showing you how this would work. So we're expecting a price to continue to run for this low. Now, on the way down here, we have created a new area of bearish imbalance where we could pull back into. And that's a good location to look for a sell from. And we just continue, looks like, and we've run the low. Okay, so we continue to run lower. Now remember, we're looking for this level to be run. It's a previous area of imbalance. Once we close that, we expect to run to this level below. So see if we continue to run lower. Okay, we're going sideways. All right, and we just hit that full target. So you would have hit the full target if you were looking for a trade up here, understanding that's where market was going. Now we have a new trading range low to this high. Now, it doesn't mean we can't come up to these previous imbalances again at a later point. Very often these imbalances where we have highs sitting below, that creates liquidity for market to push through into. So keep an eye on these if you ever have these on your chart. Obviously, we've removed this low. This low here has potentially nearly got taken as well. Let's see if we get a pullback. Okay, so we've just pushed through. We have this imbalance we can mark across. Now again, if we're looking for a pullback here, full swing, we haven't even got into that area of premium. But we have just made this sweep here in the market. Let's just see if we're going to push back down to that area of imbalance. And the market is held at that bullish imbalance. So remember, our bias is to sell, but we need to find a pullback to sell from. This low is the expected target, and this previous imbalance again, because we still haven't closed through that level, that area of liquidity, but it has been taken now, so I'm expecting not to hold, and I would expect a run for this level here. Let me just mark it out for you with an arrow. That's where we're looking for the market want to run to next. So potential area to go to first, then this low, and to run this low here of liquidity. So you can see how we're wicking above these areas. Now your bias at this point still remains. Okay, this becomes my swing low, okay, to this swing high. Why? Because this is where we have this bearish imbalance. If this wasn't there, then I'll be looking at the smaller swings, but as we have this imbalance, it's still an area I want to see price running to. So again, it comes in to this area above into premium. We could still push through now to run to this area above. So let's just see what we do. Okay, so we run lower. Okay, so now we're getting a pullback, which is good. That's what we want to see. And as we pull back, we're going to create these areas. So within our trading range, we have this potential area we can bounce from to push up to this area here. That's what I'll be looking for, understanding those imbalances. I'm still looking to target here, this area first, to offload some profits. Then you'll be looking for this area. That's how we're using this as a bias. These are the areas we're expecting to run to, but until we close this level, we won't go lower. Now, internally, we're looking for that pullback to come back inside this trading range, okay, from this high to this low inside premium. Inside premium, we're looking for swing highs where we do have some equal highs here. Some roughly equal highs of liquidity. Let's just mark that out, where we could see a run above and then a drop. We may not even get to that imbalance if we saw that. So we've actually pushed back through this imbalance. That does suggest we had to go lower. So now we've run this low of liquidity below this low. If we get a close through, we will continue lower. So let's see what happens. And we're now holding out a new bearish imbalance. So you can see that this bearish zone was created after we took out the bullish zone. Very often you're going to see this happen. So we could hold here. See, we're holding and we've pushed through. So no longer is there any imbalance there. Expect a run higher to take this high now, and to run this liquidity of these equal highs. That means we now have a trading range currently, still from this low to this high as we swept the low. So we should see a sweep of the high. Let's see what happens now. Looks like we're running lower again, sweeping the low. So now you're starting to see a range formation. And let's just see, we had a nice wick down and we've now pushed above. So we have pushed above. You can see we closed through this bearish imbalance, we left this bullish imbalance, and we're creating a new bullish imbalance there at the same time. Now, I'm not concerned to buy from these, but it is an area to show me where the market may well hold on a pullback to continue up to this imbalance. So as for the trading range, we're still in this larger trading range. Price just broken out to run for this area. So this is where I'll be looking for a trade. Now, I'm not saying I would enter off that zone. Hey traders, we'll get back to the video in just a second, but if you're over 50 and serious about achieving financial freedom before retirement, listen up. One of my students, Danny, had lost nearly 300,000 trading on his own. After joining our 90-day profit trading system, he's made back over a quarter of those losses using the mechanical strategy we teach, and he's just getting started. This program is designed for traders like you, 50 and over, who are ready to finally trade profitably. With limited spaces available, you'll get personalized support and lifetime access to our community. If you're serious, click the link in the description below to secure your spot today. Let's get you on the path to financial freedom. All right, let's get back to the video. Okay, right there, I'll be looking for some reason to take a trade on the lower time frames. This wick to the downside does suggest to me that we could hold and we could see a run lower. So I'd be looking for this as a first potential target, then running to that one to the second. Let's just see, go forward. So we do hold at that area again, the 50%. Okay, so if you missed that lower time frame, you can see we've got a daily candle shows you the entry. And we just look to see if we can continue to push down. Now, before price can push lower, we've got to run through this area of imbalance. So at this point, you'll be looking to take risk off the trade or go to break even potentially if you feel like the market may bounce from here. If we push through, so we're closing the 50%. Very often, once we see a close of 50%, we know it's going to run to the low of the zone. Then if we push through the low of the zone, it's removed it. So we should run for the low of the zone. We do, we spike through. So at the moment, we could still see a bounce to go higher from here. That's how you read this, a candle approach. Now we've closed through. Okay, so now we can remove that zone. We expect price to continue to run lower. To start with, we really want to see price running this low, which is that trading range low, and this low here at the same time, which is this current trading range, to then also push through this level. And like I said, this was a level we already hit once already, so I'm not expecting it to hold too much, but it's a level I would look to take profits off. Let's see if we can push down there. Let's just fast forward this a bit. Okay, so we did. We pulled back towards the entry area, so you could have taken another entry here, pushed down for that area. Okay, we're now running to this previous level again. It closed through this level, gives you the bias for direction to next level. And also we've got this swing low, okay? Has now been pushed through, so that's your trading range pullback, continuation complete. That's how we start to look at these in the market. Okay, let's see if we can spike through. Looks like we've now spiked through this one as well. So all the liquidity is being taken at those lows. We need to see it close through this level now to continue to the next level. Let's just see. Okay, so we're holding. Now we've got a solid close through. So now that tells me we can go lower for this level. No, I'm not saying it's going to do that straight away. We could see a pullback. Where would we pull back to? Well, again, let's mark it out. We have a nice bearish imbalance. The current trading range. Okay, so we mark it out. Is this low to this high? Okay, we do have this high as well. We can mark. That's the current trading range from here to here. That means this sits inside, okay, premium area. Now we can look at the full range as well, which does mean if we just drag this across, we have this high, which is a nice area of liquidity. I did explain, okay, how these highs can work. And like I said, there's a high over here as well, which could be run for liquidity into this area as well. So we just mark this out as an area of liquidity. This area left over has a very small leftover zone. We can mark that across. And we also have this zone left over here. Okay, so that's how you can start to see where your liquidity sits in the market. It's all about liquidity when we're understanding our bias. So we're still looking to see if we continue to run for this level here. Let's just go forward. Okay, so that went pretty quick. We've gone straight down, straight through to that final target. And that's how we can look at managing this. Now, as we see this happening, we have an internal structure. Okay, this is a break, this is a high, this is a low. So just like we've seen on the larger areas, now we can remove this. Where's our next target is down here. Okay, so any pullbacks now, this will be our target, just like we saw before. Again, that's where we see that next level placed. Remember, I placed this at the beginning of the video. If you're not quite sure how he did this, go back and watch that again and watch it again if you have to. It's going to help you. If you are struggling to understand this concept, drop me your questions in the comments and I'll get back to everybody who asks a question. So now we look at, again, we have a full, well, we have this is our full range. Okay, so above this high, so run of this high of liquidity, which would be a good area to see. So we'll mark this out as liquidity as well. Then we obviously have this range high and this current range high. Let's go forward with price. We're running up towards first. We're holding at this bullish area of imbalance of liquidity. We're running into this area of bearish. But again, it's not an area I really want to take a trade. Let's just have a look at this high to low. We are now inside premium of that smaller range, but we do have the larger range. Let's just have a look. So we've got this area here. So let's see how price reacts out at the moment. Okay, we're now closed through. Like I said before, we were closing down. We're closing through the 50% of that imbalance zone. That area means that liquidity of that area has been taken. We're now going to run the high of that zone. Even if we drop first, so we run the high of the zone. If we close through, we continue higher. So see. Okay, so then we bearish candle out. So we just held at that zone. Actually, no, we just ran through that zone with bearish candle into this area above. Okay, it's not a best looking, but it is valid. Okay, it's valid out of this trading range. We do have the larger trading range where we can see the break of this low. Grab that candle. So we have this break here to downside. That means we have this as our full trading range swing move. We haven't yet got into the area of premium. So any trades here are going to be in discount on this swing move. And I'm not going to be as good a trade. Yes, we have the internal structure. We can still see a run for this low towards this level again. Okay, so let's just go forward. It's not a level I think I'd run off. It could still run down. Let's have a look. I haven't looked at this pair, so I have no idea. Okay, so it is running down. So it is a good trade off this area. And that's because we come off this trading range. Now, personally, I would rather see a push higher with the full swing. We didn't get that. We've got this trade move down. So yeah, perhaps a trade I would have missed, but it's still, you can see the concept of what's happening, and we expect to run towards this level. Guys, if we get lower, so we're not quite gone there, and the market start to show its bullish movement. So now we have this as a new swing low, and you've then got this as a new swing high. We'll remove this because I've been filled. So another swing high. So there's your new trading range. But we didn't see we did see a break there. Just double check. Yeah, we did get a break. So that's a true trading range we can see. But now look at price. We're now holding inside. Oh no, we actually closed back down. So currently we're closing back down. So it looks like choppy price action. We could continue to run lower from this area. And well, there you go. There's the answer. We've moved bullish. That tells me we're going to run this high. We have nothing else here to stop price now. So we'd like to run this high and look to run this high as well towards this area of imbalance, because again, we have nothing there for liquidity. There is some liquidity above this high, but there's more up here as we see these areas of imbalances. So I'm expecting a continuation higher from here. Okay, so we're going to run off that high. I'm expecting this level to be run next. And we run that level deeper into this area of imbalance. Where we've got to go, we've got to run this high then. So if we close this imbalance, you can see we've just closed. Let me go in closer. Remember that 50%? We've just closed through that 50% for our bias. That means we're going to run the high. We ran the high, okay? And if we close above this high on the next candle, that means we've got to run this high of liquidity. Okay, if we don't, we hold, we go back down, we could see a drop. Let's just go forward a candle, and we've closed it. So now that tells me I'm waiting, okay, for a run of this high. I'm still looking to sell, and that gives me the opportunity to sell all the way down to this level and this range low. These are the sorts of trades I'm waiting for. Now, you may have come to a chart and seen this is bullish and think, okay, this is a buying opportunity now. This is going to take off to the upside. You're absolutely wrong. That's where bias comes in. You should be looking to run to this area, and I'll show you why. Let's just see. This should be run as liquidity. Okay, let's have a look. One more candle. Okay, so now what I'm seeing is another high being created here of liquidity as well. So I'm looking for a double run of liquidity here, perhaps even into this area of imbalance above. Let's just see. Let's see if we can run this high. Okay, so there we go. That is what I was looking for. We ran the high, bearish engulfing candle. That's where I'll be entering the market. Okay, not saying this time frame. that would be my trade. Okay, quite simple. That is what I'd be looking for. Let's just see if we hold. Now the next step would be looking to see if this area of imbalance is going to hold or fail. Now, because we're looking to run lower, let's just drag this across. Your bias is to run lower here. So you expect to see this fail. And you can see it's already closed to 50%. So it closed to 50% and ran for the low. The close of the 50%, the run of the low, this still looks bearish at the moment. But we popped up. But again, this could push higher to run this high. But I'm still looking for this area to be run. Let's just see. I'd hold on to this trade. Okay, so straight away back bearish. Let's see if we can close the low. And we do. So now this is when you have your bias back to sell. Now, if you have missed the first trade, you could easily say, I'm going to sell here. Okay, and you'll be looking again for that same target. And let's go forward, see if this holds. So we do have an area of imbalance there, just inside where price is held at. And again, you could look to take another trade off this, especially on the lower time frames. You can see it continues to run down. That's how you can understand this. And we've got all these areas here, thin price movement. We're going to run straight through that to this level because we are what? We're inside this trading range. We should see a run down. Okay, so we're moving sideways. Let's just fast forward this bit more. And there we go. Bam. That's straight through that target. So if you have found this insightful to help with a market bias, as well as looking to show you how we can take trades using this as well, apply this, backtest this, and learn this. If you want to take it even further, don't forget the 90-day profit trading system. Join up to that waitlist.